Hey, what's up, everyone? Welcome to another episode of Trading Takes with myself, Sam, Chris, and Judah, presented to you by Investors Underground. Now, tonight we are going to do something completely different. This is our 15th episode of Trading Takes. So we're going to do a complete recap of all the 14 episodes that we've done because we've had 14 unbelievable traders join us with centuries of experience, and they've all made, cumulatively millions and millions of dollars. So we just want to run through our key lessons. But first, last week's contest winner. Now, I promise I have nothing to do with selecting the winner. That is all on Chris. But I actually know Cook. So congratulations, Clint. You won yourself a free month of IU. Email Tyler at investorsunderground.com. And the key takeaway, it's okay to wear a Traders for a Course shirt everywhere. End of conversation. No, seriously, though, the discussion about MRVL trade and the second reaction is the best reaction. Yeah, that's what Ricky said last week, was good with regards to discussing catalyst type plays, something to investigate and incorporate. It's physically impossible to be upset and grateful at the same time. Yeah, I mean, that gratitude is the attitude. Yeah, absolutely love that from Ricky. And we'll probably come on to that a little bit later. Great job, guys. Enjoyed as always. Thank you. I appreciate it. And hopefully you're not just saying that because we're mates. But like I said, disclaimer, Chris, you picked out Cook, right?
100%. Yep.
Thank you. Right. So can you believe it, guys?
It's wild.
Deep episode.
Yeah.
It's been,
this whole process of just, being on a podcast and like seeing it go from an idea to actually happening, because this was really the brainchild of Judah, and he brought up the idea of doing kind of a podcast style show. And I don't even think you were planning on being on it initially, Judah, right? No. You were more just throwing it out there.
Yeah, it was just the idea. I did the interview with Anthony, and I figured it's a static interview. It's great. It's amazing. It's an introduction to individual traders, but then you don't really hear from them for another few months or sometimes years. Like you don't hear how their journey's going or what they're up to. So I thought this was a good way to constantly get new guests, new traders on here, hear about, their stories, what they're up to now, and how they've come from, where they are. So this is how it really came about.
Yeah, I think the other great thing as well, like the three of us, like we've all met, but we didn't actually know each other that well. And I think our relationships, we've got tighter as the week's gone on. And I think hopefully that's, I definitely feel more comfortable with you guys, and I'm sure that can be seen. But I think that's pretty crazy as well, that three of us 15, 16 weeks ago barely knew each other. And if we did know each other, it was just through usernames online, the odd conversation when we have met. Now all of a sudden we are chatting. I mean, obviously we've got a WhatsApp group like most people have. We are chatting daily now. Like a complete change.
Yeah, no, it's definitely been fun, and I'm very happy that we're doing this.
Mm-hmm.
Yeah, and it's been super funny to see everyone's personality come out in different ways. So Judah's cracking us up every single week, half roasting people on their dress attire, and I know people were cracking up with that with Ricky, and he's a great sport, and it's just been so much fun.
Yeah, and I think that the longer this goes is going to be great, because we're going to find out more and more about Judah's future wife, and then maybe one day it'll actually be, oh, we're at Judah's wedding. We're actually not future wife, she is wife now.
We're going to do a wedding episode.
Yeah. When Judah gets married, we'll actually be there and we'll record an episode there. We'll do it live. Right. So just a reminder that if you're enjoying the conversation, like, subscribe, and just leave any comment, like your key takeaway from the last 14 episodes, just anything, share feedback on the show, any guests you want to see, topics you want to see discussed, takeaways, just absolutely anything. And if we get a few good ones, I heard Chris is in a good mood over the next 7 days. If we get some good ones, we are going to pick out perhaps more than one. So yeah, just comment below and pretty much honestly comment anything. Right. So can either of you guys remember, can you take yourself back to was it the second? I think it was the second week of January we started. Can you remember that conversation with Nate?
Oh yeah. I mean, it was our first episode. We had Nate on, and obviously, Nate is behind a lot of this and behind Investors Underground. So it was kind of the perfect guest to kick things off. But it was just a lot of fun because, coming into a new year, we got to really talk about like what had 2023 been like, and then what were we thinking 2024 was going to be all about. So, I mean, I remember that episode well. We talked about a lot of like cycles, market trends, like anticipating versus not anticipating. And, one thing that Nate really harped on for 2024 was just building a better work-life balance. And I know that was a huge goal of his. And, he's in a different phase of his trading, career. He's been trading longer than all of us. And he's, reached a level of massive success, and he's done a lot to give back. So I think that at this point in his life, it was just really important for him to, the first half of a trading career is like letting, you work super, super hard to kind of make a life for yourself and to really make this work. And then it's like, once you reach a certain point, you want trading to be of service to you, and you don't want to be a slave to it anymore. And so I think that was a big goal of his. And I think that, I can speak for myself and maybe you guys too, but it puts that conversation at the forefront of like, what is trading actually? What do you want out of trading, and what do you want it to look like in your life? And like, for me, the way that I've kind of taken that lesson in is, trying to really work on a healthy relationship with trading and not being compulsively trading or not doing it in a state of frustration, but, having that work-life balance in an emotional way, even though I trade every day. So that was a big one for me.
Mm-hmm. Yeah. And you talk about it the emotional way, but there's also like, obviously what I was thinking about was like the time of it. It's a lot of people, they put so much effort into learning about the markets and trading throughout the actual day. Like, there's people who wake up and are on the screens at 4 a.m. And then some people live in other places where it's really like 7 a.m. for them. And I think it's important though to have that time balance, because you could be on your computer from 4 a.m. till 8 p.m. if you're really there, especially during COVID, like when there was all this volume here at all hours of the day. Like, you're on your screens from 4 a.m. to 8 p.m. If you have a family, like that's not like sustainable. That's not going to work. Even for your mental health, like the balance needs to be clear. You need to treat it like you would any other business. I know we can't get in at 9:30 like most businesses, and it takes some pre-market effort and work to do. But you need to take those walks, like especially Nate. Nate takes those walks all the time. You'll see it in the chat that he's like going for a walk, or he's taking a bit break, or he'll be back later. And like, that's what's important, because like you could be staring at your screens and then you look around and you realize what time it is, and like you have that, like it happens to me all the time where like I'll have like 3-4 hours I'm just staring at the screen, and then like I'll get up to go eat and I'm like just like brain fogged and dizzy, and like I need to get up more often. I need to look away from my screens more often. And you also need to give attention to family and friends and people around you. Like, to have a healthy lifestyle, you need to hang out with friends. You need to go out at night. If you're home all day and trading, you're not experiencing that thing that everyone else around you is at work. Like, my friend, for example, goes to work in the city in New York. He's surrounded by millions of people all day. He's interacting with people at work. He's interacting with people at restaurants. He's interacting with people on the trains. And there's just so much interaction between him and other people. Whereas for us, it's like the only interaction is through the screens, and we're still on our screens. There's no like hand-to-hand handshaking, and there's no face-to-face talking. And that's very important for, growing as a human. You need to have that interaction with people, and you need to kind of also exercise, and you need to have time for your job, and you need to have time for life and what's important. So that's what I took out of it, and trying to give the right hourly structure around trading, because you also want to learn, and you can't really learn that much during market hours in terms of like touching back on your trades through market hours. Like, you need to be doing that after hours. So you need to really work around trading and being like being in your life, and actually like enjoying your life, rather than just letting your work control you.
Mm-hmm. Yeah, and I think it's a reminder of, I mean, we all chose this path for a reason, and obviously we got the passion for it and we do enjoy it, but there's also, like, you know, when we talk about all the cliches of like be your own boss and etc., like often like I'll have to be reminded, like I still feel really guilty taking a day off or to having a light day or whatever. And I think, like, actually you're right, that is important. And like a big change for me this year is I haven't traded 4 a.m. And I mean, it is 9 a.m. for me, but and like now my mornings are, you talk about work-life balance, like I mean, I love it because like I used to think that, like, you get your work done and then enjoy your evenings, but a lot of the time actually you're really tired like after your work day. But actually, like, I'll get up, play golf, gym, and then I'm ready to, and I feel actually like doing it that way around. I actually feel like really engaged and ready to work when it actually comes down to it. So I mean, my life was I mean, that was a big change for me actually, because I would just be glued. And I remember, like, when I first started, I'd be like 4 a.m., 8 p.m., and I was just, I don't know, probably unhappy, sad, miserable. And at first I started off with no trading after hours, and then slowly it's actually no trading pre-market.
The interesting thing, Sam, is that you do a hobby before you actually start trading. Like, you play golf, so it's like I already enjoyed my morning. Like, now I could go work. So you have like a much better mindset going into it than everyone else. Like, rolling out of bed and getting right on the screens. Like, you technically had your fun, and now you come in with a very energetic and happy mindset because, like,
No, I do, yeah.
there's really no losing in golf. Like,
No,
you know,
really, let me tell you, I lost this morning. It wasn't pretty. But there's like, yeah, I do feel like I've won, and like I know I've talked about ice baths quite a lot as well. But like, I feel like I've got something hard done early in the day. Something I don't want to do, I've got it done. The gym often I don't want to do, I've got it done. Golf often I do want to do, but like that's my fun bit. And particularly for me, like, because a lot of the time, by the time like the market closes at 9, I can't really do any of that stuff anyway. I'm too exhausted then to go to the gym. I just want to like do my reviews and like maybe watch some TV, like to try and like take my mind off the market and go to bed. So I think that's been a massive change. And I think even if I was on like a different time zone, if I was on Eastern, I still like, I get up early. I don't get up early now, but I would get up early to, obviously I couldn't play golf at that time, but I'd hit the gym. I'd make sure I hit the gym before or whatever. And then, I mean, I would like my evenings mine, but anyway, that's another topic. So, yeah, I mean, that's good. And I think, like, just as like a review for Nate, obviously he's not here, but I think he had his first holiday, I don't know in how long, in a long time, where he didn't trade for like 4 or 5 days. So, I mean, he's walking the walk as well.
It's got to start somewhere.
Yeah,
you got to take that break. It's like breaking an addiction. You got to start. And then just over time, I guess you learn to stay away from the markets. But it takes a lot of time, especially after that many years.
Yeah.
Yeah. And what would you say to like viewers though, who perhaps, because obviously we still do have this, like, there still is this grind mentality, and I think like perhaps like the three of us, obviously Nate's in a different position to us as well, but like we still like need to turn up, we still need to grind, we still need to shop, but at the same time we still can have fun with life. But how would you like say how should the viewer perhaps reflect on that? Because if you're at the early stages, if you've only been trading like 3-4 months, then I mean you probably shouldn't start golf and trading at the same time, put it that way.
Yeah, I think one of the really important things to kind of take note of is when you're spending so much time like trading or learning how to trade, analyze your day and think about how much of that time spent at the screen is actually effective time spent. Because it's one thing to like sit in front of a screen for 8 hours, but how much of that time are you actually making progress? How much of that time are you learning something? And is it like 2 hours of that day, and then you have 6 hours of just kind of like zoning out or like scrolling or doing other things? Because in that case, you might be better off, spending 3 or 4 hours in front of the screen and then 3 or 4 hours doing something else, instead of, feeling burnt out for that whole 6 or 8 hours in a row, if only a little bit of that time was effective. So whether you've been trading for a little bit of time or a long time, I think just looking at which part of your day is actually productive and focusing on that's key.
Yeah.
I think.
Sorry, go on, Jude.
No, I was going to just say, I think it's important to just hang out with people at night, friends, friends, family, like just have people around you at night and like just surround yourself with good people. And this way, like, you're laughing, you're enjoying, no matter what kind of day you had, don't let it get to you and just make it like, don't let anybody know the kind of day that you had, whether it was the best day of your career or the worst day of your career. Just like they'll never know. That's the goal you want to have, is be around people where they'll have no idea whether you were up that day or down, pretty much.
Yeah, I think that's big actually, and that's a change as well, because like my girlfriend now just says, I don't care. Like she's like, I don't care, good day, bad day, I don't care. Like occasionally I'll be like, I need 30 seconds, I'm gonna vent, and then I'm done, swept, and we won't talk about it again. So I think, yeah, that's big as well. Now, can either of you remember who was guest number 2?
We had the
Stan.
Godfather.
The Godfather. We had Stan, yeah. And just to be clear as well, like these are also like our key takeaways from the conversation. Not necessarily always something that they said, but perhaps just something that we sort of really took away from our conversation. And from Stan, I mean, risk. I know Judah loves talking about risk more than anyone. Be the best risk manager you can be. And yeah, I mean, Stan just epitomizes that absolutely.
Yeah, and Stan's just a class act. I mean, we all know him. We've all like worked on projects with him. We see him in the room, but he really is just such a classy guy, and he's always like going out of his way to help people. And he's just very thoughtful with everything that he does. So like with trading and with, making analogies or explaining things, you can tell he spends so much time just thinking about these kinds of things that it's inspiring to know that someone is, not just going surface level with the knowledge that they need to get by, but like truly trying to understand it to the best of his ability. And whether that's with like controlling your own risk or just thinking about, do I feel guilty about spending so much time at the market versus spending that time doing something else? And like he'll think about those things and kind of start a conversation. And it's not always about like having the right answer, but just having the conversation to talk it through and to see what's right for each person. So yeah, I really enjoyed talking to Stan on that episode, and just seeing how purposeful he tries to make his trading. And again, it's a part of his life, and he does a lot of other things outside of that. But that was a great conversation. I took a lot away from that.
Yeah, absolutely.
Mm-hmm. Yeah, I think I think it's I mean, I don't think it goes unnoticed, but those midday sessions that he does, like he doesn't need to do them. And like people are extremely busy during the day and they're super focused on their trades, and he's just, let me go grab a coffee and hop on for a midday session. So that's another great thing about Stan. And in terms of, what he spoke about being the best risk manager you can, for me, I think that's extremely important. Like let's say you take 100 trades this year, right? We're in December. You had 99 wins, right? Not one loss. And you don't have risk management in place really. You have wins, so you didn't have to worry about risk management. Now comes one of those liquidation plays which ran up prior to that. So like a hollow, all those 90, like you could owe money after winning 99 trades. Like if you short, and you're in one of these ILAGs or hollows or any of these names, or even doesn't even need to be those, but if you're in any of those names, and especially on the short side, you could end up owing money. So like without risk management, you don't know what tomorrow will bring, today will bring. You need to have risk management in place. This way you don't have to worry about winning every trade. You just have to worry about, properly, make just the process of just losing, making more than you lose, and just cutting those losses short. So with the risk management, I think that's where you also learn the most about setups as well. Like for me, I think risk management is the most important thing.
Yeah, and I think I mean Stan's just like a really cool guy anyway, and you can just I don't know if you've seen many of his charts, but like the guy is emotionless. Like he just seems to make the right decisions, and I mean I guess he just trusts himself to manage that risk. And if it goes a little bit against him, he just gets out, and it's not an issue. And then he's ready to attack again. So yeah, I mean he's just one of those guys that I mean I talk to him a lot, and I mean anyone in IU will talk to him a lot as well because he's always there. He does the midday study sessions, he does midweek study sessions with me a lot. Just a great guy, I think.
Yeah, and I think that an underrated kind of part of like doing those midday study sessions or like trading live or like walking people through it is that he'll literally be talking someone through the trade while he's in it, and that can be really really difficult because if you like lay out a thesis or something and it immediately starts to go the wrong way in front of everyone, now you have to cut that trade and you have to really stick to that. And instead of like, I think for a lot of people that'd be difficult and it can be like embarrassing sometimes. Like I know it is for me. Like if I had this, very beautiful thesis about something I laid out and then all of a sudden it's just like tanking or going the other way. It's like, it's not always the most pleasant thing to like voice your opinion like that and then have to immediately, like sometimes within 30 seconds, be like, you know what, I think I was wrong, or this is not doing what I thought it was, and being able to immediately flip that switch. So that's a real skill that he has as well.
Yeah.
Thinking about him being cool, like you'll literally see his executions, and you're like today he was chatting through BPTH. We're recording on the 18th of April, and he has some entries, and it was going against him. And I think it was getting like near to his average, and he's just there chatting away. And I'm thinking, you're really, I mean, he had the last laugh they offered intraday, so I mean, he did well. But at the same time, it was like, hang on, there were moments there where I was like, but he's just cool, just super cool.
Yeah,
cool. Judy, anything? Sorry.
No. I was just gonna. I think before when Chris was mentioning that whole beautiful thesis thing, it's like, yeah, like you could have a beautiful thesis and it's okay to be wrong, as long as you have a plan of getting out. Like big deal, you stopped out. If you stop out at like 1-2% loss within the trade, like that's that could be more than okay. So like that's 1% on your position, not on your account, which is small. It's like pretty much the smallest it may get, but like like that's the point, is that you have a thesis, and if it doesn't work out, you need to have that risk management plan to stay in the game.
Yeah.
And like it's all it comes down to, because like things could look great and we could go to war and things start looking like shit. So you have to have a plan.
Yeah.
Mm-hmm.
And a lot of the time things look shit before they look good again. I think that's always the reality. I'll always be like yesterday I was trading something, it looked shit, and then within 3 seconds, literally 3 seconds, it looked the most beautiful thing I've ever seen.
Yeah, there's times where like I'm making a scan and like there's 20 names, and the next day like I can't find more than 3, and then the day after that I'll be like, yeah, we need time, we need to see things set up again. Then the next day I'll go over my scanners and I'll come up with like 10-12 names that look good, or like 5-6 names. So like every day it's just changing. You just need to have that plan of getting out.
Mm-hmm. Yeah, absolutely. And episode number 3, I think the great thing about this episode, Cody was wearing a red Tesla hat. I think since then,
all the kids have gone higher.
I don't think it's upticked since then. But we said one of the key lessons that we took away, and I think, and I've written this on my notes a lot, is go for the best and forget the rest. And I know that was something, Judah, that, I mean, it was just important to your trading.
Yeah. So for me, I mean, we see this all the time. Like I'm in IU all the time, and I see this happening where somebody will have like a sector run. So like we'll have either cannabis or lately the oil and gas names run, and you'll have like 2-3 names that are looking great. They're clearly the leaders, like even before they start moving. And like it was day 1, I believe, of INDO a few days ago, or maybe 4 days ago on day 1 when it came out of that consolidation. And like that was the only oil and gas name I believe I like focused on and mentioned in IU. And then like after these things start running, like it could be hours later, it could be even like 2 days later, somebody will say like, oh, I'm gonna take this, and like there's zero volume, it's done nothing, it hasn't been doing anything on a daily level, and it's like I'm taking this in case it runs. And it's like there's tons of opportunity in the main name and the main few names. Like it's not worth being in the other names, because if it's not moving now, and now these names that just gone up 100% start to pull back, like these things either aren't going to move or go lower. So it's like if your laggard name is going to go up, so is the main name, and the main name has more range, it has more, there's more. I feel a lot more confident with those main names. So like, the cannabis names, you want to take the top cannabis names. The other ones don't matter. Most of the times there's not even like liquidity in them. So like to take them, like we see it over and over and over again, where like the main 2, 3 names will go up a few 100%, and then the laggards will never move. And then they'll continue to go lower after the main names start to pull back. So I think like it's just important to focus. And I feel like it's because a lot of people are scared. Like it's already either up so much, or it's just the main, like I don't know how to explain it, because this has happened to me. Like sometimes you're just scared to take that main name that's moving so quickly or moving so much, or it's been so like up so much already, but there's always that consolidation, there's always another opportunity to get in. And it's like you have to look for that. That's what you want to be in the range, the real names. And Cody, for him, what he was talking about was the AI names, like the Nvidia. He was looking at all the shittier names that haven't really done anything. Meanwhile, Nvidia like tripled from the breakout, so it's like, or doubled from the breakout. But like you want to just focus on the leaders. For some reason, people don't do that. They're just scared to do it.
Yeah, and I think as well, like it's just so much easier to, because then if you're trading the leader, and this is what annoys me about not trading the leader, it means you still have to watch the leader. You still need to have that chart up, and then it's very easy to overreact to like moves that name's making in your own name that you're trading, and I think that just makes it a lot harder rather than just being like, okay, here's my key levels, blah blah. So yeah, I absolutely, yeah, I agree.
And another thing is like it doesn't need to be forever and static. Like for example, Bitcoin, like we have Coinbase, and then we have MSTR and Mara Riot, right? And then the other names were like, names that people didn't really think much about. But like a laggard doesn't always stay technically a laggard. You just have to wait for something to set up. So like CLSK was never up there with the rest. Like it wasn't in anybody's minds that much, and it set up, and it offered great opportunity lately. So like it's not that you need to always avoid the laggards. It's more just wait for that to prove itself. Let it set up, let it show something. Don't just take it because it hasn't done anything. Hasn't done anything for a reason. But now like CLSK turned out to be, a decent trader. And you don't have to take that name off forever. It's just follow where the volume is, follow what's moving, and just stick to that, and avoid the rest.
Yeah, and that like the quote of I'm not predicting, I'm observing. And I think that really speaks to what Judah's talking about, where it's like instead of trying to think about, okay, this one's going now, which ones do I think is going to go? Where it's like you're just like making predictions into the ether. And a lot of times that's how you get stuck in those, like what I call Hotel California trades, where you can check out anytime you like, but you can never leave because you're the only one basically creating volume in it. Yeah. And so just like looking for the names that, a trend's already in place, like it already has volume. It's already, getting mentions, it's getting price action. Like that is a trend to join, not to be the first one into something and then hope that someone sees your volume spike and then they follow in and then it kind of kicks it off. So, it's in some markets that might work, but that hasn't been the market for the last couple of years. So yeah, I totally agree with just buying the best, forgetting the rest, and just going with the path of least resistance. And that's the one that's already moving.
What ends up happening is, they'll buy it. Let's say the stock's $2.40. They'll buy it at $2.40. And now like the stock's at $2.45. And like it's not doing much. It's not good profit either, but they don't want to beat it anymore because it's not moving, it's not getting volume. They're up on it. As they start to sell, their last sale could be at $2.25, $2.30. Mm-hmm. And like they end up taking a loss on themselves because like there's nothing there. There's no volume. There's nothing doing. So it's like, yeah, instead of hoping, just I'm not saying to chase the leaders either, but just look for those good entries and focus on the leaders, or be prepared, understand how the leaders move, like how the volume comes in and what they look like. And even from history, like INDO and HUSA were like one of the biggest two. Like you could go back in time, like Mara Riot were the top two. I
Mhm.
remember like back during COVID, I was trading them at 50 cents and they went to 80. And now on the next wave up, those were the two that people remember. So like that's something you have to study also, like what people remember, like Tilray and CGC and ACB over the others. But like it's just studying the history and just understanding how these things move and be there instead of elsewhere.
Yeah.
Yeah, absolutely. And I think like within that theme as well, like talking about like AI, for example, we then did have like the laggards did then move like SOUN, but then they set up, well, they just set up beautifully anyway. Like it wasn't about it being a laggard, it was actually this is a good setup. And until it did set up, actually, probably would have got chopped around a little bit. But as soon as it set up, it was a pretty clean move up. And then since then, it's been pretty clean move back
Yeah.
down.
Mhm.
Yeah, so well done, Cody, with the red hat. Let us know when you actually buy a green hat because we'll go along.
I was just talking to him today, and I was saying that Elon owes him a green hat at some point this
When
year.
we see Elon in a green hat,
Yeah.
that's a signal. Now, episode number 4 with, I mean, a lot of this episode, some of this episode anyway, we were talking about retirement. And I swear since then, I've seen Jack like in IU pretty much every single day. But the key message from, well, I think the key message from this conversation was what's the end goal and just to think about what your end goal in trading is. And I think Jack talked about that quite a lot. It's already made like the life-changing money. Does he need to be glued to the screen? And I guess it kind of does link to, that conversation we had with Nate as well.
Yeah, I think Jack is just such a he's a very insightful young guy because he's still mid 20s, maybe 25 or something, and he's had a huge amount of success, and he's been able to keep a level head about it. So I always say that like one of my favorite things that he's ever put out was that video on like why he's retiring, and that the conversation on trading addiction and just the parallels between true addiction, the same that you see in many different kinds of vices, and trading. And so a lot of times I think traders can mask their addiction behind saying, oh, it's my work ethic or it's my other things, but that's not really the case in a lot of senses, because it can be about like dopamine rushes, and it can be about FOMO and like needing to be at the desk and needing to force trades, and like basically being compelled to do something instead of doing it because it's what you enjoy and it's something that's good and because you have a healthy relationship with it. And I encourage anyone who hasn't seen that video on Jack Kellogg's announces his retirement to really watch it. And it was very eye opening for me to see him make those parallels, and I took a lot away from that. And just to talk to him face to face was really cool because even over the last couple of years, I've seen a lot of his content, and I try to study a lot of successful traders, and he was someone who consistently came up. And so just to be able to have a conversation with him and for him to come on was just a lot of fun.
Yeah, so he was talking about like thinking about your end goal in trading. And like a lot of people, they claim, like, this is not a hit at Jack, but they claim to be retired and then they'll come back for some specific setups or A plus setups, but it's like the A plus setups is what people should be going for anyway. Like if you come back for the A plus setups, imagine where you'd be if you only took those A plus setups. Like if you started from the beginning in that retired state and like just being there for the best or focusing only the best. The thing about your end goal in trading is like, I think it's less about like your a money goal and more of like a life goal, and like how often you want to be there, when you want to be there, what you want to do. Do you want to go from like scalping now just to create a balance and then figuring out how to swing more on the long side and just like take more long-term gains? Or like that's where my mind is on thinking about the end goal is like, because I think like if I'm gonna last here forever, I want to be in the markets forever. Like I don't want to retire and completely drop the markets. Like people, I feel like, it's very hard to retire and give up what you love to do. And it's just about thinking how you want to trade at the end goal. So like after you pass the finish line, there's a new start on like your future trading career, your retired trading career. Because like you have the knowledge, you just spent, let's say you're going to retire at 65, you started trading at 20, 25. You just learned 40 years of trading. And I'm assuming you're successful if you're trading at 65 still. So like you have all this knowledge, you have this portfolio. It's like you can't just retire and give that up. Like you need to figure out what you want to do from here. You obviously don't want to be sitting on the screens and scalping all day or shorting, or because that's not good for the heart either. And at 65, you don't know what could happen. So you want to really just start like, what you want to know, like where your end goal is, for me at least, in a trading mindset, more long term. I mean, pretty much what I do now is kind of what I want to do then. Like this is just what I want to do. I don't really short, I don't really scalp that much. The end goal, I guess, would be to completely cut that out and like override the emotions of like wanting to trade that and scalping, but knowing that my real true desire is to like swing completely more. And like, but shorting, I still don't short, so that's fine. But it's more about the end goal in your trading style, less money, because like once you go chasing money, it's like you don't sell a position because you think it'll go lower or higher, and you're just like waiting for that to happen. And like, let's say you have a weekly goal. We could tie this in the end goal. Let's say you have a weekly goal of an X amount of money, and you're like 10% away, and you're in a trade right now. You should be getting out, yet you hold it because you need to hit that goal. You could end up losing, and you'll be down 20% off the high, or 30%, or you could be losing it all. So like, I think for me at least, not having an end goal on money is a thing. It's more about like where I want to be as a trader at my end goal.
Yeah, no, good point. And I mean, since then, I think he came back out of retirement and made like a meal trading SOUN, and I think he's been grinding this week. So, yeah, I mean, that's exactly what he's doing, is just retiring.
Yeah. And a good set there, which is what more people could be doing, or should be
Yeah, I
doing.
still think like the hardest thing, and like Tom Dante talks about this as well, guy from London, like that the hardest thing is to do nothing, and he uses more expletives than that, and he'll say don't be a something, which I won't repeat, but it's so true that like that mental capacity burn, etc. I mean, this is a pretty tiring game, and I think if you're just guessing or over trading or whatever, then I don't know. I just don't see. It's not, well. It's just not very professional, I think, and I don't see much longevity in that at all. Right, episode. This guy, episode number 5. Mr. Sang Lucci. We got him to stop talking about Ozempic for a little bit, just a little bit, and he's talking about trading is a mental game.
Yeah, that episode was so much fun, and one of my favorite lines is when he's talking about, I think, Quilamagi, and he's like, what's he gonna do? Like take his yacht over here and kick my ass, and he's just going off, and he's just a hilarious guy. Saying he's great, and yeah, we talked about a ton in that episode, and I feel like he always brought it back to trading is a mental game, and like he almost talked about everything other than trading, and it's like aspects of your life and like your emotional state and like what you're trying to do. And like he frames his trading by like so much of what goes on around him. And I thought that was just a fascinating take on it. And, he's in a lot of different markets, and he's known for having like a really good, like read or like a feel for something. And that comes from a lot of, thought, a lot of experience. And that was just a really, really cool conversation to see how he frames everything. And I enjoyed it a lot. But he does stand up. He's just a hilarious guy. So that was a lot of fun.
Mm-hmm.
Yeah, the main point being a mental game. It's because like it's true, it is. Like one, you're risking your money that like you need to live and survive, and like yeah, if it could continue to compound over time, like you lose and then you try to make it back and you lose more and you try to make it back and lose more. You need a bigger gain to get that back. And it's like, you're just feels like this goes back to Stan. Like if you don't have the risk management, then you're just compounding your losses and your mentality just continues to drain. And that's why you need to have that risk management, because then you just keep on emotionally, spiraling down. And the market is just a bunch of emotions. Like it's just a bunch of traders on the other side,
Mhm.
just like you, just like us, just like me. Like that's all it's made up at. Like that's what it is. Like it is a mental game. And I think that's where you need to tie in the risk management, is to limit that bad mental, if that makes sense. Like just limit that bad mentality and just have that plan and try to just focus on the positive and just be positive.
Right. Yeah. I mean, great episode. Sang's just one of those good guys, and he's just fun. Like, I mean, he also just makes trading fun as well, which is definitely like a takeaway from that episode as well. Right. Episode. Honestly, like the funny thing is about all these, like as we like go down memory lane and revisit all these episodes. I don't know about you guys, but I don't feel like it was that long ago that we spoke to Sang. But actually, like he was
Jack.
Yeah, like
I think
Jack's.
Jack was 4. I thought he was like 2 weeks ago.
Yeah, I mean, that's one of the things I've always said about trading, and I don't know what it is. Maybe it's just because like I enjoy it compared more to my last job or whatever. But like, or maybe it's just life in general. But time just goes so fast. Like I can't believe that like already that we're at week 15, episode 15, and like, I said, like some of these guys, like next like episode number 6, this doesn't feel like 9 weeks ago. Brian Shannon, like that felt recent as well. Keep trading as simple as possible.
Yeah, I think that was a refreshing thing to hear just from someone. I mean, Brian's, he's a very well-known published author. He's an incredible trader, and he's been in the market for, I mean, decades. And just to hear someone who has so much experience to say, keep it simple, like stick to the fundamentals, and just like use very simple indicators like, the anchored VWAP or other things. It's like observe a trend in place, find a good spot to enter in that trend. And that's basically like the strategy. Like it seems so simple, and to be able to do it for so many years and do it effectively, it's really cool, because I feel like so much of the time that we spend as traders is on these like little one-off, like niche kind of like things that like it can take so much of your attention. But if you just kind of zoom out and say, okay, like what am I actually trying to do? It's like if I'm trying to join a trend, a long, well-established trend with higher highs, higher lows, and doing it from an area where, the people who are in it, their kind of average cost, and then basing it around that. I mean, it's just a very clear-cut strategy. So that was a really cool conversation with Brian.
Yeah, he said he used like a bunch of different indicators, and every time he used an indicator, he lost money on it, and like he realized that that's useless, at least for him. But I agree completely. Like I think you keep it as simple as possible. Half the time, you don't even need these indicators. They obviously help, and they'll enhance your trading, but you really don't need them. Like you don't need any of them. Volume and VWAP intraday is probably the only 2 you need. And even if you do need them, you could still find levels without them. It's going to be different trading. It doesn't make sense not to use them, but I don't think you need as many indicators and things that people do have on their screens. Like I think just keep it simple. For me, it's just moving averages and volume on the daily, and then intraday I have just a VWAP, 65-day, I believe, exponential moving average, which interestingly, I don't know, it helps and it's there, and then volume. So it really comes down to volume, VWAP, intraday, and then the daily. It's just some moving averages, and really depends how long term or short term you trader you are. Like you don't need the 10, 20, 50, 100, 150, 200. Just use the ones that like is the type of trader you are. Like more short term, 10 and 20. Longer term, you could use the 50 and 100 or whatever it is. Like just around the trading style that you have, you could really just use like 2, 3 indicators, even less. And mentioning volume as one of those one or two indicators involved. But yeah, just keeping it simple is what we got out of that episode.
Kiss, keep it simple, stupid. And I think like technical indicators aside, like I think like the takeaway, like a lot of people, like people will send me charts or they'll ask me, what do I think of this? Or what, when should I be taking profits or whatever? And I'm like, I don't know. It's your setup. Like you should be telling me like what to do. And I always think like sometimes just keep it simple. And I write to myself every morning, like wait for levels, wait for the entry signal. And I think that's the key thing is like take everything else aside, just what in its most simplest form works. And I think, well, for me, it was just this is what my entry signal looks like, and this is what my exit signal looks like. And whether that needs or requires indicators, that would depend on obviously that individual. But that's just like I mean that when I do and I keep it as simple as that, that's when I make the most money. And when I start veering away from that and I start thinking or start guessing, oh, it's going to stuff in a second, or this is the bottom, or whatever, like that's when it goes wrong. So, yeah, I mean, for Brian to say it, I think it's just refreshing. And I mean, that's just a constant reminder, for us all, I think. Right. Episode number 7. This definitely felt a lot more recent than 8 weeks ago. Brian Lee, the legendary Brian Lee, or like I called him the R guy. I think quite a few people might call him the R guy. And this is single-handedly the biggest, I think one of the biggest lessons, period. Let your results compound. I think that was the major takeaway that I took away or have taken away from Brian, because I think like there's definitely a thought process that you will suddenly be rich overnight, and it actually, I think that could be further. I mean, I'm sure you could get lucky, but actually, a lot of it is just the sum of doing your process every single day, and then as your account grows, so does your risk level, right? And I think that's just in its fundamental point, I think is so key, because anytime, like for example, and I know from personal experience, anytime like I swing for the fences, it usually goes badly. But when I just keep doing the solid process every single day, often like I look back at a week, a month, and I'll be like, whoa, that was good.
Yeah, it was a fascinating conversation. He's just an interesting, great guy, and he's just a wealth of knowledge, and you can tell he's really thought through the different ways that you can grow an account. And he's compared a lot of styles. And, I know that we all have different styles, and some of it's more discretionary, some of it's more systematic. But I think regardless of whether you're completely discretionary or systematic, just the thought process of, consistently compounding and trying your best to avoid large drawdowns to interrupt that process. That was kind of the big takeaway. And so whether you do that, by looking at discretionary setups, and as long as you have your risk, reward, and probability, and that all lines up to basically, act as a link in the chain of just compounding further and further without taking a big drawdown. That was a big takeaway that I got from his conversation.
Yeah, I think the snowball effect is a huge thing to understand. And, I think an issue with people in that scenario is they look at the end goal of what they want to make. And it's hard to see, like, let's say you have I'm just going to use these numbers for just to be more simple, but let's say you want to make $100,000 by the end of this year, right? And you made like $300 today, and it's like very hard to like, I only made 300. How am I going to hit the 100,000 by the end of the year? But like, we're thinking multiple positions as well. So like, let's say you take 5 positions and you make a few hundred on each. Those add up, and then you add that into your current like portfolio cash, and you continue to like grow the amount that you're putting into each position. So like, as you profit, your sizing is getting bigger, and it's like a cycle of just like sizing up and making more, and sizing up and making more. And like, you may be making 300 on a trade today, But like in 2 weeks from now, that let's say you're 10% profitable on a trade, I'll be 600, and then it keeps going up. So like it's hard to see now, like that far in the distance, but like you got to just follow the process, and the money just will follow. I think that it's like, at least for me, like seeing that small amount come in, it's like, how am I going to ever, because like when I started, it was during COVID, and like the amount that I made during COVID was an extreme, like it was tons more than you're making a day now, at least for me. So like it's like, how am I ever going to get back to the level doing this, making this much? But like you realize that over time it just builds into your cash, and you keep putting that cash, putting more into the position, and then like it's just a cycle that you have to understand, and you experience it, and you see for itself like how fast it could grow. Like we mentioned this also last I believe on Ricky's last week, that Warren Buffett was nowhere near his net worth today when he was like 60, 65. Like it just compounded from his late 50s to where he is today. Like I don't have the exact numbers, but like it's a drastic change. Like he has a book called The Snowball Effect. Like this is something that many people have to understand, is that like you're not going to make what you want to make in one day, and if you do, your process is probably flawed.
Yeah, and they have a great quote about compounding. I think it's either in that book or either from Buffett or Munger, but they said, in order for the compounding process to work, like using the analogy of a snowball, is that you need sticky snow and a very long hill. And that's basically, sticky snow is like the gains that you make, you kind of keep them, and it keeps, clinging to that portfolio. And then that long hill is just how long are you actually doing this? And that compounding really explodes.
Mm-hmm.
Mm-hmm. And I definitely think, like, as well, that with patience and the right process, like I've been shocked, like at how quickly I've sized up in certain periods, like where it's just like all of a sudden you go through a bit of a hot streak, and you're like, if anything, actually, it's quite hard to keep up with it. That's like the quite shocking thing. You also think, oh, I'm desperate to get to this level, but actually, as you start approaching it, you're like, whoa, I'm getting it too fast. I need to slow down. So yeah, no, I think that was, that was a fascinating conversation. I mean, Brian's just one of those, just one of those guys who just, like you said, he's just put so much thought into his process, and he's just able to articulate it really well. And I think like another thing that's great about Brian as well is there's lots of school of thoughts out there. Like you would hear a very different message from someone at a prop firm, for example, they'd talk about, actually, you need to size up 10x on certain setups and things like that. And I think it's refreshing, actually, someone obviously mainstream being out there being like, no, just be consistent. Next episode. Now, I missed this one. This is when I had, like, well, as Chris described it, I had the bubonic plague, which I didn't, but thank you, Chris, for that.
Mm-hmm.
And just remember, Chris, revenge is a dish best served cold.
It's coming.
But I did watch it, and it was this was a fun one. And I think that what was great is that Phil is still a very active trader, but his style has just changed and evolved massively. And straight after this episode, he was tweeting about, I think it was, I want to say SMCI, and he had a huge trade. It was long SMCI. I think he made 7 figures over a weekend, something like that. And he said, like, this is exactly what I was talking about in the Trading Takes episode.
Yeah, that was a lot of fun. I got to put on my moderator hat for that one. So I got to step in your shoes, Sam, but it's not easy at all, but that was a great episode. And it was just super interesting because like Phil has such a long trading history, and like he and Nate have known each other forever. And it's kind of cool to see, 2 very successful people who have not only like stayed friends for all that time, but also just been able to, reach incredible levels of success. And yeah, with Phil just talking about how what he used to do with like shorting a lot of like small caps and things like that, he just outgrew it, and the risks became too much for him and for his life. And so he pivoted, And that started to get into some more option stuff, and then it got into doing a lot of more swing positions on good companies, good fundamentals, good technicals, having those like large trends, and then just kind of going after the best of the best with them. And then every now and again, when you have like a super A++ setup like SMCI, then he'll kind of come out of retirement, and as long as he can control his risk, he can attack those in a big way and walk away with those large gains. But yeah, he's just a super nice guy, fantastic trader, and I really enjoyed that episode.
Yeah, I was gutted I missed that one. It looked like a lot of fun and was just a great conversation.
Mm-hmm.
Yeah, evolving the trading style. I mean, this could mean a lot of things. Like in the beginning, evolving your trading style could mean you're as of now you're failing as a trader. You got to figure out like if this is the style for you, and you got to evolve and see like what is your style and what you enjoy doing and what you're profitable on or what makes more sense to you. And then there's evolving it later down the road when you're successful and your account just grew so large that you can't really trade these lower liquidity and smaller names, and you need or even like we go back to Jack and you want to be a little bit more retired, you need to have a different style for that. And you need to see like, what your portfolio, like if you have a massive account, maybe you want to trade different names, slower names, and swing more. And you're really evolving as you trade based on, your portfolio. And at the same time, you're evolving, I guess not your style, but there's always themes and sectors that continue to move. And like, that's something else. You got to rotate out, and maybe you like for cannabis, maybe, you scalp cannabis names because you know that they don't hold up a lot of the times. Meanwhile, these other names that do like AI, you could swing trade those. And like, really, it depends. Like, if it's a large cap name, you could swing that. If it's a small cap name, you want to scalp that. And you're just like always evolving and figuring out like, what kind of trader you are and where you should be a certain trader and what areas you should be another type of trader, and just figure out your style. And that just comes with experience.
Mm-hmm.
Yeah.
Absolutely. And no, that's a great episode, and well done, Chris. You did great, and didn't quite put me out of a job. I was thinking you did such a good job. I was thinking they're not going to need me anymore. I'm done. Up next, we had. I mean, this was another great. This next one was completely different to anything we'd done before. It was someone who perhaps isn't associated with day trading, but we had a great conversation with Anthony Pompliano, and I mean, just a fascinating entrepreneur. And obviously, like, I know he's known for being a Bitcoin bull, but like, I just think that conversation, like, I just come away and I was thinking, like, he's just so inquisitive, and he was talking about how he just would ask people. He's just always like so thirsty for knowledge. Just one was a lot of fun.
Yeah, and just the fact that he was willing to come hang out with us and talk and just share his experience with entrepreneurship. And even though it's not exactly in the trading realm, it's still, you are trading maybe over long time frames, because at the end of the day, whether it's Bitcoin or anything else, most of the time, I don't want to generalize it, but most of the time they're going to convert that back into at least enough cash to live on and have a good life and everything. So it's just a different form of trading or investing. But yeah, Anthony was great. He's funny. He's super inquisitive, like you were saying. And just like anyone he talks to, he's trying to learn from them. He's asking them what books have they read recently, and just always having that kind of beginner mindset of even though he's been on like every TV network defending Bitcoin and doing all that, and he knows like the ins and outs of it, he still feels like there's always more to learn, and like he's humbled by how much information is out there. And so it's just a really, really interesting guy, and that was a great episode.
Yeah, he talks about like treating trading, or treating it like a business, really. And like, it goes a few ways. Like, you treat it like a business in the terms of that, yeah, we work for ourselves, and market technically opens 9:30. You got to be up from 8 o'clock. You got to prepare. You got to put in the effort. You got to study it. Just because we work for ourselves, it doesn't mean we don't have a boss. We technically, we may have a boss. And at the same time, like, you think of it as a business. Like, you buy a stock. Let's say you're in wholesale and you're buying clothing. You buy stock on something that's hot right now. And it could be the same thing as like clothing. So something's trending, let's say on TikTok, and you have a shirt that everyone wants to buy. You buy that. Technically, I'm not saying like there's a shirt in a specific brand that's public. I'm speaking in terms of a stock equaling a shirt that's hot, right? You buy that stock. Now everyone wants in on that stock. Everyone wants that shirt. Everyone starts buying it, right? You buy it at $1. The stock price is now $2. If you own a wholesale company, you want to sell that at 2. You want to pretty much treat it like a business in the sense of like, if it's going down and nobody wants the product, you need to sell it for less. You need to get it off your shelves, and you need to take in to your position the hot products and the hot stocks. And you got to, just sell them for more. And it's just a game about like flipping it and just buying what's hot, selling it for higher. If it's not hot, if nobody's interested anymore, getting rid of it. And it just like, that's how I think about it in two ways of like, as a business in the sense of like each stock is clothing. And I don't know if I'm explaining this right. It sounded better before in my head. It's in that sense, as well as like treating it as like a business in terms of like, we work for ourselves, but like we got to put in the effort, we got to be awake, we got to be present, and we got to be serious about it. We can't just like hope and pray that these things will come back, and we can't hope that they'll go to certain levels. Like you need to have a plan, just like you have a business model when you're presenting a business to investors. Like you need to have a plan, you need to have something laid out, you need to have a vision, technically.
Yeah, absolutely. Yeah, I don't know how many T-shirts you're buying and selling for $1 or $2. Mine certainly cost a lot more than that, unless it's one of the freebies that we all know that you
That's
can
right,
live
yeah.
in 24. And this costs a grand total of 0. But I'm sure, I mean, yeah, you could have a good price.
Somebody offered you 2, you would take it.
Yeah, I mean, $2. Yeah, I'll buy it. I'll take.
It's like an airdrop.
$2. Yeah, exactly. Up next, we had. I mean, we had the Clover Boys, Clover Trading. We had Kyle, Dom, and Huddy, and I mean, this was quite crazy. This is the first time we'd had a 6-way conversation, which was, it was crazy. It was again though. I mean, I keep saying it was a lot of fun. I genuinely mean it. Like all of these episodes have been a lot of fun. But like for me, the takeaway was just these three, like the three of them, Mike, Dom, and Carl, just knew each other so well, and it just sounded like they had so much fun trading together, and so much so that they then opened. Obviously, they started Clover Trading, invited people into that environment, and I just come away thinking like, yeah, you need your colleagues, your good friends, and you need to have those daily conversations to make what's quite lonely actually really social and fun.
Yeah, and it was cool that like they all kind of came up at the same time. So I think it's a testament to like your friend group and like the people that you spend time around. Like if you're all smart, driven people, you're going towards the same kinds of things, then I think it's a huge benefit to be able to be around people like that. And I feel like that's a different experience than a lot of traders have, because most people start on their own and they kind of pick things up, and then they might eventually end up somewhere like in a group or a community. And it's not until you kind of get that you realize the benefits of it. And so it was just a really cool story. And I mean, they were cracking up about like their former jobs and going door to door. And, if they lost it all and they couldn't trade, what kind of jobs would they take? And yeah, it's just a really cool conversation. I wasn't sure if it was going to be chaos or not, having so many people on the screen, but I think it worked out pretty well. And yeah, those guys were great.
Yeah, I think we've got to do it again, actually. Like, I think, I mean, I don't know what the limit is with what we can do, but I just think, and then it goes back to like the vision of the show was to be like that sort of, conversation. It's just like 6 guys who could be in a pub, they could be anywhere, just in the living room having a chat, and that's kind of like the vibe. And I absolutely loved it.
Yeah, I think it's important finding a group. I mean, they did it. They found their group in person. Many people just were online here, but like it's important in a bunch of ways. One, it could be comforting, it's talking to somebody and going through, your ups and downs with somebody and getting some advice from people who may have more experience than you, as well as bouncing ideas and trying to figure out where you are as a trader. In these communities, you get so many different types of traders: long side, short side, swing, short. It's a good place to be. And we trade alone. We trade a lot of us, not everyone, but a lot of us trade at home or in an office alone. You know, we don't talk to many people throughout the day. This is why you got to make the effort to be in a community and communicate with others throughout the day, as well as, you know, have friends and family that you can speak to at night. And this is what makes trading tolerable, is like, you know, that like work-life balance of just like putting everything together, finding a group, finding communities, people you could talk to, and people that could, you know, you could, you know, talk about everything. Really, it could be life, it could be trading, it could be experience, everything, really everything.
Yeah, and I think those like, they just epitomize fun, I thought, and also like they go deep into their setups as well. Like their style of trading, I just really like as well. Like they seem to turn up for those big opportunities when they're just timing it right, when the range just expands for everything. They're like bang, they're always there. And you know, if you see like a big breakout or a big, you know, it's my first red day, you just know they are going to be there. Right, just 4 weeks to go. I mean, this is I mean, it just shows you like how much we can talk about this, is how much we've learned from this. And I mean, the three of us, we're just incredibly fortunate to be, you know, it's great to be able to have these conversations. Up next, week 11, episode 11, absolute legend, Greg Shabika. I mean, this one was truly like really inspiring, just how well he knew his process and how meticulous he had been with everything. Like very detailed, every nuance had been thought of. I mean, I just come away and I was just like, I was just truly inspired, and I felt really, you know, privileged to be able to, you know, have that conversation.
Yeah, I felt that same way. Just like a real privilege to get someone who's like an exceptionally successful trader to just come on and, you know, in such a humble and nonchalant way, just describe, you know, what it was like for him and how he found his edge and how, you know, he kind of discovered a lot of things on his own, and then later on linked up with, you know, other traders and people like Nate who could then, you know, he could benefit from learning from them. And I know that I think he has a good relationship with Quilamagi and everything now too. So, but Greg's just a very interesting guy, you know, incredibly meticulous and intelligent. And just if you were to look at the amount of work that he's done to really get to where he is, I mean, just going through thousands or tens of thousands of charts and just reverse engineering and just like looking at every single thing that you could have for a setup and then weighing those variables and then, you know, kind of like deciding which market does this combination of variables work in and which one does it not, and just constantly be adjusting. I mean, just like an AI, you know, bot or something like that, but he's just so fascinating. And one thing that really stuck out about the interview was when we asked him like what it really takes to be an elite trader, he just said, you know, commitment. And it's just like, if you have, you know, the mental capability to do this, and if you are putting in enough effort, it's more just a matter of commitment and time and learning from the right people. And if you do that for long enough, then you can just have, you know, exponential results. And so it was just very encouraging that, you know, it's not a secret formula. It's not like a secret sauce or anything that you can buy somewhere. It's learning from good people and just doing that so frequently, you know, over years, that you can develop true mastery of something. And then at the end of that interview, when he asked us, you know, each of us for something that he could learn from us, I mean, just such a cool experience. And super quick story, but at Traders for a Cause in Vegas, I actually sat at the same table as him while we were playing poker, and he was just, you know, super funny, and like you could tell how locked in he was on every single hand, and just, you know, how you do anything is how you do everything, and that really applies to Greg.
Yeah, what stuck out to me was when he said to have a proven plan versus trading what others just mentioned online. One, because that's like kind of how I started out trading, is I was just taking what people tweeted about and put online, whether it was like that those articles, or wherever it really was, either Twitter or the articles. But like I realized now that I was just lucky and I didn't learn anything from it, and none of that ever worked. So like I think that's the most important thing that stuck out to me, also because of what's happening recently. A lot of these things have been pushing off Twitter, and many of them are starting to just immediately round trip. I mean, we had one good move which locks in like tons of people for like people are anticipating, waiting for the next one. Next tweet comes out and these things just completely round trip like off the bat. So I think it's really important to just have your own plan and avoid what people are mentioning online. It's good to learn from people if you're going to learn from them. And like the only things that you should be taking from what people mention online is if it's a lesson that you could learn, not, just chasing things that they put out, like giving you details that you already know, like putting out the stock and the float and like insider. Like we all know that information. We all know what the float is, how much volume there is today, how much volume there is yesterday. We have this information. It doesn't help. What helps is your plan and what the stock is doing.
Mm-hmm. Yeah, it's good. Like, I just came away and I was like, that was fun. I learned a ton, and I was just engrossed in just everything that he had to say. So, episode number 12, we had the sniper, we had Nick on, and the funny thing is, like this conversation, and I mean, I think it's probably going to be famous for his, his story, which I'm not going to repeat, but it's, we're talking liquidation and in multiple ways, but like a lot of military people talk about this. So I got a good friend that who I play rugby with is in the Marines, and we'll always talk about how you fall back on your training. And I think like, particularly in stressful moments, which obviously like we don't want to be in them, but we do put ourselves in them. You will fall back on your training. And I think that was the takeaway from this for me, was like, just learn not to freeze and just have a plan. Actually, what does my training say? What do I need to do now? And I think like he made some really good points about actually sometimes you just need to remove yourself from that situation. It might just be like, I'm just going to flatten this trade and then reevaluate. So I think, that's my key takeaway. What do you guys think?
Yeah, I think that the concept of like learning not to freeze, I know that I've seen this in my own trading, is that sometimes you can mistake, freezing for patience. And so you can kind of, if you're in a position for a little bit too long and you know that things aren't quite going right, you can be like, oh, well, I'm gonna stay with this because I'm just gonna be patient and kind of see what happens and do everything. And it's just a self-justification. But what it really is, it's freezing. It's knowing that you should be scaling out or you should be taking off the position, but something's keeping you from doing that. And so talking with Nick, I mean, he's hilarious and he has a lot of trading experience and a lot of other experience, with the military. But that was a really great lesson of just, fight or flight, but just don't freeze and don't be, passive and let the market kind of, push you around, or like be very intentional. And then, you can scale in or out, or you can change your bet size. It's very fluid, as opposed to like a sports bet or, some other kind of bet, like a card game where like once you place your bet, you're locked in. With trading, things are changing in real time and you can adjust your position. You can adjust your odds along with how that position plays out. And I thought that was just a great perspective to have. So I just really enjoyed that one.
Yeah, I think tons of losses come from freezing. Like you have, this is why I think it's important to have a plan. You come in with something, where you're going to stop out. And that's really all it is. If you have no plan, if you're taking something very risky, like I've seen on Twitter, a lot of people on those like names like iLeg and Hollow, like they froze on the way up. Like they didn't know what to do. And there's no looking left anymore. There's like nothing to think about. You have no idea what it's going to do. Like you don't know what to do. That's the issue with freezing. This is why you need a proper stop level from before. And if you don't follow those rules, you need to put in like a hard stop, and you need to be more hard on yourself. And that's pretty much where I think freezing comes into play, is like just not having that proper plan and not knowing what to do because you didn't prepare enough, or because you're taking more risky names that are either moving way too fast to the upside or downside.
Mm-hmm.
Yeah, see, and just well, we've got two more left. So if you're liking the conversation, enjoying what we're saying, drop us a like, subscribe, comment below any key takeaways, things you want to see on the show. Just just comment anything, and you can win a free month of IU. Next, we had a very good friend of mine, Emil, who obviously one of the mods in IU, and I mean, like, he's been doing it he's been trading for such a long time. And I know this is like quite a I mean, it's not the most exciting takeaway in that there is no substitute for experience, but I just think it's so true. And everything just becomes a little bit easier when you've got that experience.
Yeah, just knowing that you've seen things before, and this was something that we talked about during that episode, is just the scars that people kind of accumulate throughout a trading career, and like some lessons that are learned in a very hard and harsh way. And so like he talked about, he used to do a lot more of like investing or like long-term stuff, and then I think it was in 2008 or sometime around there he got totally burned doing some of those things. And that kind of like shook him out of one style and brought him into another style of more trading and having a little bit more control over his positions. Because after taking, a monumental, drawdown like that, you do what you can to not experience that again. And so, I feel like a lot of traders or investors or speculators, whatever your style is, everyone has, some really hard experiences that can kind of shape you and your style. And so I think it's about like taking that experience and learning from it, but then also not letting those scars, hold you back from trading the way that that you should be, and not, causing you to flinch. And so it was just a super insightful conversation with Emil. And he's just such a nice guy, very experienced trader. And then, talking about how his quality of life, when he's trading now, he's not going to risk his quality of life. He's not going to be trying to swing for the fences on risky things anymore. And, trading is there to serve him. And I thought that was a really cool thing to see, just like we've talked about with some of the other people, how over time, trading has been a gateway for them to live the kind of life that they want. And past a certain point, you don't want to risk that in order to just, put another, set of numbers on a screen or something. It's just not worth it. So it was just a really fun episode.
Yeah, I can tell you that Emil, like, what he does practice what he preaches. Like, I'll just be messaging him and it'll be like, I don't know, be halfway through the trading day, a quarter of the way through the trading day, and he'd be like, "Oh, sorry, just getting burgers from the butcher," or literally, it's like, "I've just kickstarted the barbecue," or something like that. He really does like live it. Yeah, he's just such a great guy.
Yeah, everything that we've just touched upon came from our experience and their experience. Everything molds together as you experience your as you go along your career. So like, it may be very obvious that like there's no substitute for experience, but like you need to experience it. You can't, like we said about, when Greg, like, you can't be chasing other people's ideas, because then you'll never have an experience. You'll never have an experience of your own. So you need to just go out on your own, take ideas from a bunch of different people, real ideas, not just, not just chasing tweets, but take ideas from people and put them together and see what works for you, see what doesn't. And over time, I mean, you mold yourself into the trader you're supposed to be.
Absolutely, absolutely. And last, well, not last, but latest, and certainly by no means least, last week we had Ricky Analog on the show, and this, I mean, it's another. Obviously, I'm biased, but genuinely like a great conversation. And Ricky's just one of those guys. Like, he shares a lot of his executions on Twitter. He's just an absolutely just a great guy. And like, his hashtag is, gratitude is the attitude. And I think that's just such like a key takeaway. Like, I think it's so easy to be like so like enthralled by what you're doing and like almost I feel a little bit trapped. But actually, like, we get to turn up every single day, and we get to do what we want. But it's actually it's actually quite crazy when you think about it. Like, we literally turn on our computers and make money. Which, when you think about it, is bonkers. And I just love like a lot of the. I mean, in terms of like social media, and so it can be like a little bit of like. I know it can be quite negative at times, and just some of the stuff that Ricky puts out, and like his hashtag gratitude is the attitude. Definitely worth like just searching that, because it's a lot. It's fun. I mean, I had a lot of, again, a lot of fun talking to Ricky last week.
Yeah, his insight about it's not possible to be grateful at the same time as, I think, unhappy or sad or something like that, or depressed. And, just really focusing on what a privilege it is to be able to, like Sam was just saying, to be able to show up and to trade and to do something that we find interesting, that we enjoy, and that is, you can make it super profitable. And it really is a privilege. And to think about it that way, instead of being like, I have to show up and I have to do this trade or whatever, it's just like a total mindset shift. And I think, his emphasis on it's the trading journey and like just enjoying things day to day, enjoying your family, enjoying what you get to do, and just focusing on it in that light, as opposed to like this frustrating, drawn out like process that I think so many traders fall into that trap. And so that was just super refreshing. And then he's just such a cool guy. I mean, extremely knowledgeable. He's known for his due diligence on SEC filings, and so like very like complex stuff. But then him bringing that back to like, just because I did this research on this, or just because I found this, doesn't mean that the stock has to do anything. I'm looking for, basically, like, this is kind of how he described it. It's like, I'm looking for stocks that have like a trap door, and so that like if they pull that lever, like it could drop out, or that there could be an offering. But if they aren't pulling that trap door, then you can't assume that it's still going to fall through. And so taking the price action, and the fundamentals and everything into account. And so it's just a lot of fun. And then, your comments about golfing with him and him skateboarding and just how he prioritizes his family. And then Judah roasting him about his T-shirt choices. And it was just a lot of fun. And I was cracking up for it.
Yeah, that's probably the funniest moment we've had in all 14 episodes. Probably the first time actually someone's really been very critical of a guest as well. It completely does this fashion sense.
It was less of a roast.
Yeah, another thing because and you just said like, I have to trade or I have to do this. It's very funny actually, because this week The Rock launched his new Under Armour clothing range, which I can assure you costs a lot more than $2. The t-shirts that Judah's selling. I mean, it's The Rock, I love you, Dwayne Johnson. You are more than welcome to come on the show anytime, but your clothes are massively overpriced. But what it says on the front of the t-shirt is it's got I have to work, but they cross out the have and put get to work, and that's like the whole slogan. And I think that's so true. Like, you can just, if you just like, even with like a subtle sort of just change in vocab, you're like, actually, yeah, I get to. There are people who genuinely are going into work today who hate it, and I get to do this. And actually, if I don't feel like it or don't want to, then okay, I don't have to. Hashtag gratitude is the attitude.
Yeah, I think if you take a step back, there's tons that you need to understand and that you need to be grateful for. First of all, in terms of life, like, first, having something to watch this video on, being in the house, having clothes, having food, having friends and family, everything outside of trading, you definitely need to be grateful for. And then jumping into trading, there's no boss, there's no real true hours. Like, you could really create your own hours. You could come when you want, you could leave when you want. There's not somebody checking if you're by your desk all day. There's no, it's really up to you about how you want to come and approach this field. You work in any other field, you'll either be molded or you'll have to work the way that they want you to. And you'll be on their schedule, their hours. There's nothing that you can do about that. So, that's another way that you have to think about being grateful for in this business, is that, like, you're so free to do whatever you want. And then another factor and field within trading is like, every day there's something new. It's exciting. It's either randomness, like you're just trading something new every day. It's a different trade. It's a different name. It's, it's that way. It's also theme based, like cannabis, it's being talked about in the world about legalization, and now you can trade it. And now, like, you're very up to date about something in the real world. And same with AI. Like, you pretty much have firsthand news and knowledge and experience on artificial intelligence because you're in this field and you're trading those names, and like everything around you is you can learn with being involved in the market. You know what I'm saying? Like before I started trading, I didn't care about a lot of these things. I wasn't up to date with news so much or technology. But like as you get into the market, I mean, this news is hitting you, and you have no choice to be up to date with everything going around, which is how everyone should be. Like everyone should be aware and understand, like, you know, what's going to be the future, what's technologies coming out. And then there's also the sense of being grateful for, you know, your trades, even your losses. Like you can't grow without those losses. You know, if you have losses, if you never have losses, you won't understand like what you need to change to really exponentially grow as a trader. And like there's always going to be darkness before the light. And you have to understand that like bad things will happen, but you learn from those things and you got to come back from it. And like there's just so much that you could be talking about with gratefulness, but like that's one thing, the main thing that I take out of Ricky is to always be grateful, friends, family, children, all of it, trading and out.
Future wives.
Yeah, everything.
Future wife. That's right.
Gotta really be grateful.
And I think, you know, that obviously that was the order. That's how, you know, we did finish last week. But I think that's such a perfect way to wrap it up. I mean, it's been a lot of fun. We've had a lot of fun for 14 episodes. So what do you say, guys? Carry on?
Yeah, I think we'll continue.
I think we'll keep doing it. And I know that we're going to have some great guests coming on.
We are back. We got another guest on next week. This person, I'm not going to give any clues away, but he's a lot of fun. It's going to be a great session. Just a reminder that Clint Cook CL 2543, you've won a free month of IU. Email tyler@investorsunderground.com and leave a comment. I mean, we're just saying, like, leave anything below. Feedback on the show, guest requests, topic requests, key takeaways. Leave it below for your chance to win a free month of IU. And how generous are you feeling, Chris? Do you reckon next week?
I think if we get a lot of good comments, then we'll be throwing out T-shirts and 3 months of IU. And, yeah.
If we get a lot of comments, we'll send you one of Judah's $2 T-shirts. How's that? It's just like, subscribe, comment below, and thank you to you both for what's been a great experience, a lot of fun for 15 weeks now. We've just that's our 15th. Thank you, and let's do it again next week.
Let's keep it going.
Let's keep it going. Thanks, guys. See you later.
Thanks, guys.
Bye.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.